Corporate earnings are driving center stage. Mass Financial is one more name. Reported 11% rise in net interest income for the December ended quarter. Assets under management rose 20% while asset quality remains stable. Let's discuss the quarter gone by with Mr. Kamlesh Gandhi, the CMD of the company. Mr. Gandhi, good having you. Thanks for joining in. Can you tell us how the quarter was in terms of recoveries? Because I'm guessing the disbursement growth or the AUM growth that we're seeing in your company is a result of you not going all out to get all the business that is available. You would be a bit cautious because of the scenario.
Good morning. And very true. Because if you see the AUM growth of 20% accompanied by growth in PAT on quarter to quarter by 21% is a result of our cautious approach. Because if I share with you the segment which we are working, especially in the SME, there's a lot of demand. But because of the overall situation, we have to be very circumspect on how we extend our credit. So as I shared with you during our last interaction also that we believe in prioritizing quality and profitability over just an AUM growth. And with this approach, we approached this quarter and we are happy to share that we could maintain the asset quality. That is very important that even during this time, we could maintain the asset quality.
So when does, growth targeting start for you then? While obviously you're a bit cautious right now because of the environment, Mr. Gandhi, but considering that there is demand in the marketplace and, this is your own cautious attempt to withhold disbursements, when do you start targeting growth and make sure that you can get to the next level?
So if you see the trajectory of our growth has always been between, say, around 25 to 30%. So when we talk about a 20 to 21% AUM growth, it is not much on the lower side, but a slight caution from our side. So we think that within next quarter or two, we can be anywhere around 25%. But as such, we are happy to grow the book anywhere between 20 to 25%.
Is the two-wheeler market still extremely soft, Mr. Gandhi? And when do you see a turnaround for that?
Difficult to give the timeline because every quarter we have been hoping that next quarter it will pick up. And during this quarter, that sales was as much as down as around 20%. So let's hope that within few quarters, the two-wheeler sales also picks up and eventually we can discuss more in that segment too.
No major change in cost of funds this quarter?
Yeah, we could reduce our incremental borrowing by 40 basis points. And for the 6 months ended this year, our cost of borrowing was around 9.6%, which has reduced on a 9-month basis to around 9.35%. And the incremental cost of borrowing is around 9.2%.
Did I hear 40 basis points?
Yeah.
And that's a large drop. Most companies are struggling for 5 or 10 basis points. Would you believe that there could be incremental benefits on the cost of funds as well, Mr. Gandhi? Or this is about it?
I think this is settled like this for this quarter as it looks like for this year. But if I share with you, according to us, we are still paying around 30 to 40 basis points more as compared to our original borrowing cost when we used to borrow before this crisis. Because we have a very immaculate track record of more than 2 decades with various banks, and we have demonstrated our capabilities to manage the assets where we work in. And that is the result that the banks and the lenders repose a lot of faith in us. And that results and that translates into an efficient cost of borrowing for us.
I'm assuming if you're going slow on disbursements, you don't require a large quantum of funds anytime soon?
No, see, if you see, we have on a corresponding, on this 9 years, we increased our AUM by 1,000 crores. So from 4,900 roughly to 5,900. So we have increased our AUM by 1,000 crores. So once again, I share that we grow anywhere between around 25%. This is around 20-21%. So the requirement of the funds has been more or less on the same in the same horizon the way we used to borrow it in the earlier times. So there's not much reduction in the quantity we borrow. And having said that, we had still a lot of undrawn limits. So we get the amount we want accompanied by the efficient interest rates.
Okay. So no, Mr. Gandhi. So very quickly in a nutshell, you won't raise any equity capital in the near term, I presume.
Now, look at our capital adequacy is close to 27%.
Okay.
And we generate ROAs anywhere between 3 to 3.5%. And as I told you, we intend to grow very steadily at between 20 to 25 years. And just to share with you, this is our 99th quarter of consistent financial performance. We are in our 25th year of operation. And the next year we'll be completing our 100 quarters. And if we will be sharing with all of you our performance over all these 100 quarters.
Okay.
So we've been very consistently performing over all these 99 quarters, on increasing on a quarter-to-quarter basis, irrespective of the macro conditions.